How concerned are you that Basel III will, at the end of the day, hurt the profitability for banks and therefore possibly ensue another credit crunch?
For sure, Basel III will require more and better capital, but the implementation period is so long that I don't think that there will be major impact on the credit capability of banks. For the time being, the issue for banks is that the demand is lower than the expected one. So I do not see in the short run any problem in this perspective.
Now, last year in Davos, really the summit was mainly dominated by a lot of you guys, a lot of the bankers coming here trying to persuade governments and politicians not to regulate too much. Have they won?
I don't think that the issue was not to regulate too much. The problem was to discuss properly how to implement this regulation, because clearly all the bankers were aware and are aware of the fact that we need a better regulation, we need more capital, and in reality many banks have already increased the capital base quite significantly. The issue is on how to implement this new regulation and how to discuss within regulators and industry in the proper way in order to find the right solutions. This is one of the main principles of the better regulation concept, to have a good discussion between regulators and industry.
Now, the European Commission was also talking about possibly a bank levy. Would this be something that you would be for or against? Is it one of the better ways?
I'm completely against that. I think that to add other charges to the banking sector is not the right solution, clearly, because if the banks have to extend credit, in order to extend credit, they need capital. They must have more capital and better capital. If they will have, on top of all of that, a bank levy, I think that this should become a problem. And in reality, my view is that this will be moved to the customer at the end. So at the end, we will have a higher cost of the credit activity.
So better to tax bankers' bonus? Is this something that we talk a lot about in the UK as one of the things that actually politicians really want the bankers to do? And, well, some of them do and some of them don't.
One thing is to tax bank bonuses. I think that the taxation must be aligned to all the other industries, unless all the good people will move elsewhere. And the banking sector, as we have seen, is so important that we need good people there. So personally, I think that all of us, we have to pay the taxes in the proper way. And if you have higher revenues, higher income, you have to pay more taxes. But I think that this has to be aligned to all the other sectors. What is important on bank bonus is the governance, the transparency, and the real alignment to the value added that the banking sector is providing to the economy. All the things are more important, in my opinion, than to have a higher tax rate on bank bonuses.
Now, you arrived last night. I know you've been able possibly to catch up with some of the participants here. What's really concerning them? We have this poll saying that there's a concern that we'll have to restructure or even see a default of some of the European countries. Is this going to be the main topic here, or is it the fact that emerging markets are going to be so strong that they'll pull everyone else with them?
In my opinion, the key issue is growth. As Corrado was saying before, I think this is really the issue. Clearly is mainly an issue for Europe, because the old Europe is growing by far less than all the others. We are old, as I said before, and we are still too fragmented. In my opinion, to move forward in further integration at the European level is dramatically important.
But so what the problem is that we may be looking to cut the budget deficits too soon? Are we just being too aggressive with the austerity measures?
I think that to have the right cut on budgets is important in order to reduce the cost of capital. Growth, I don't think, is driven by the public expenditure or by monetary easing. Clearly is very important, but we can't have more. I think it's more related to structural reforms and changes in, for instance, bureaucratic system and again, in having more Europe. The internal market, as has been shown by the Monti study, if will be fully integrated, can foster growth by 1% at the European level, which is quite a lot.
Alessandro Profumo, thank you so much for joining us.